Welcome everybody. Thanks for joining for this webinar. This is a presentation that I did actually originally last month at the Society for Insurance Research Conference in Orlando. So this is a version of that presentation. To get started, obviously all of you know, I'm guessing all of you have roles in insurance, probably property and casualty focused. We've heard a lot over the last several years about how channel is changing in the insurance world. So obviously, there was already a shift in the last years towards the direct channel, and that's already been happening quite a bit. But in addition to that, we've seen other channels kind of break through with we're seeing the online aggregators like Google, Compare, and others. We're starting to see some retailers break into the mix, Walmart and others. And we've also seen car dealerships and realtors start to offer insurance as sort of a convenience as folks are buying a home or buying a car. So we've heard a lot of this from our clients, from people we work with, and there was some interest in kind of looking into this a little bit further. So Zeldis decided to do kind of our own proprietary research to look at this a little bit more and specifically focus on a couple of the channels that were of particular interest to some of our clients and partners. So what we did is we did an online quantitative survey with 500 U.S. consumers, 25 to 64. We did, within that age range, balanced by census for age, gender, and income. We are today going to look at the data primarily by generation, and you can see how we define millennials, Gen Xers, and boomers. Obviously, there's lots of different ways we could look at this data. It's a pretty robust data set, but for the purposes of this presentation, we've focused in on that data cut. We did our survey. While today we're going to focus on personal lines, auto and home insurance, our survey did cover also health and life insurance. So we kind of broadened it to all of those products. But so to qualify for our survey, folks had to have at least one of those products. But just for our purposes, 417 did have auto insurance and 304 had homeowners. So when we're focusing in on those products, those are the sample sizes that we're seeing. We also, in addition to the quantitative survey, we just did a handful of in-depth qualitative interviews with agents and brokers. We wanted to see the other side of the coin. We wanted to get their perspective on some of these changes when it comes to channel. So we did do a couple of phone interviews with them, and we'll look at just a little bit of that at the end of this presentation. I want to shout out to our partners that helped make this happen. Luna provided the online sample for the consumer survey. Schlesinger Associates provided, helped us with the recruit and the sample for the qualitative interviews we did with agents and brokers. And a company called VoxPopMe helped us with really a new methodological tool that I'm going to talk about a little bit later when we get to it in the presentation. So just to kind of level set how we talked about channels in our survey, how we presented them, we talked about the direct channel, which we said direct through an insurance company via telephone or the website. We did look at those separately, but for the purposes of this presentation, we are combining, into one direct channel to look at here. We asked agent, we just said through an insurance agent or broker. Again, we did ask a follow-up question as to whether folks use a captive or independent agent, but for the purposes of this presentation, we've combined the agent channel. Then we looked at online retailer, which we called online through a non-insurance company website with some examples there. We said we looked at retail store, which again, we defined as just through a retail store with some examples. And then we looked at, pretty straightforward, through an auto dealership or through a realtor or realty company. So those are the main channels that we focused on here. We did ask some other channels, but that's mostly what we focus on for this presentation for the auto and home piece. So to start out, we're going to look at some of the data on channel usage, familiarity, and consideration. We asked folks how they've ever purchased auto or homeowners insurance. We didn't narrow them to their last purchase. We just kind of said, have you ever, how have you ever purchased these types of insurance. And I'm going to show you the numbers in total first. I'm sure none of this will be a surprise to you, but obviously the channel, it's dominated by the direct and the agent channel. They are by far kind of the main ways people are purchasing. It's fairly evenly split between the two. This other category, which shows 8 or 9% in total, that's the biggest chunk of that is through the employer, so through a group, auto or home, that's 3 or 4%. Another 2% are saying through an auto dealer or through a realtor, and then everything else is 1% or less. When we look at this by generation, again, I don't think this will be too much of a shock to everybody, but younger folks, the millennials, are much more likely to be buying their auto and home insurance through the direct channel, whereas boomers are still much more likely to be purchasing through an agent. So again, not a surprise that younger folks are more likely to go direct. Older folks are more likely to still really value that agent relationship, and those Gen Xers are sort of somewhere in between that. We also asked just familiarity of some of the emerging channels. So these numbers in total represent the percent who have at least heard of these channels for purchasing insurance. So you can see it's pretty high, anywhere between 4 and 10, and over half are familiar with these channels, or at least have heard of these channels as a way of purchasing insurance. Looking at it again by generation, and here the darker bar is familiar and the lighter bar is at least heard of. Again, the millennials are much more likely to be aware of most of these channels as a way of purchasing insurance, more than half, and with an auto dealer, almost 3 and 4 are aware of these channels. When it comes to retail store, you see more of an even split by generation. You don't see as much difference, and that's going to be a pattern throughout. I mean, I think all of us have experience with retail stores. We all shop, so we just don't see as much of a difference by generation there. So the million-dollar question, how likely would you be to use some of these channels to purchase your auto or home insurance? Now, we asked that on a 7-point likelihood scale, and the numbers I'm going to show you are top 2 box on that scale. So here it is in total, again, looking at everybody, not by age. I kind of leave it up to you all to decide if these numbers are high or low, but you're looking at anywhere from 1 in 10 to slightly above that for the realtor and auto dealer channel in terms of top 2 box consideration. If we look at top 3 box, which is still positive on the scale, those numbers go up to closer to 2 in 10 and up to, about a quarter for the realtor and auto dealer consideration. Same pattern, millennials definitely more likely to consider these emerging channels as a way of purchasing their auto and home insurance. So you can see for the dealers and the realtors, you're looking at close to 3 in 10, and for the online and retail store channels, you're looking at 2 in 10 for millennials. Boomers, low single digits. They're pretty happy with what they're doing. They're not really looking to consider any other ways of purchasing auto and home. Again, if you add in top 3 box to this, everything kind of bumps up. You see consideration closer to a third for millennials and getting up to 2 in 10 or a quarter for Gen Xers. Still single digits for boomers, even when we look at top 3 box. So there's consideration there. Obviously, these are newer ways of doing, of buying insurance. We did, I should say, really just focus on purchase. So we didn't ask them how likely they were to use these to shop. We were really talking about these as a purchase channel. We also, we talked about, we're looking at online retailer here. We also asked folks, even though Amazon.com does not currently offer auto or home insurance, we know that that's something that's been talked about. It's something that's been out there in the ether. So we did want to get a sense of how that would impact consideration. So we did ask folks, I'm putting the online retailers number up here, the general one from the previous slide. You can see that consideration for Amazon definitely gets a bump. And again, if we're looking at top 3 bucks, it would be about 25%. So definitely a bump for the brand of, that familiarity with Amazon. And what's interesting, I think, is when you look at it by generation, you can see that that bump doesn't come from millennials. Millennials are like, online is online, Amazon's great, any other online is great. Those numbers really don't change. But for Gen Xers and Boomers, you definitely see a bump. They're comfortable with the Amazon brand. They're used to the Amazon brand. So you see more consideration there. We did decide to, again, based on some of the things we've been hearing from our clients and partners, dive a little bit deeper into 2 of the channels. So online retailers and online aggregators, retailers, and retail stores. We did go a little bit further. We wanted to get a sense of what people thought about these channels, what they perceived as the pluses and minuses. So, what we did here, I mentioned earlier when I first started, we worked with a company called VoxPopMe, and they helped us implement a little bit of a new methodological tool that you'll see here in a second. What it was, this was an online survey, and we asked open-ended questions like we would in any online survey, and we gave, people would just type in their answers and hit submit. What VoxPopMe did and what they helped us do is we gave people the option, if they wanted to, they could type in their answer, but they could also upload a video of themselves responding to the question to give them something else to do, something a little more in-depth. We capped it, so we had 500 respondents, but we said we only were going to allow 50 videos per the 2 open-ended questions we did this in. I'll be honest, I was super skeptical of this idea. We had learned about it at a conference and we wanted to try it out, but I felt like, it's hard enough to get folks to engage in surveys, and we're always talking about engagement in online surveys, and I just thought there's no way folks are going to kind of go an extra mile and do something extra and above and beyond, spend more time in the survey to do this. So I thought nobody's going to opt in for this. Well, again, we capped it at 50. We got that in the first couple of hours the survey was open. About 20% of our respondents overall decided to do a video instead of type in their response. And my second surprise was that there was a huge variety in the demographics of the people who submitted videos. So this wasn't only millennials who decided to use the video approach. We had all ages. We had all race and ethnicity. It was really a diverse group of people who opted in for that approach for the video. And finally, I was definitely thought that the quality of the videos would be not great. I was like, are these even going to be usable? And again, really pleasantly surprised. Most of the videos were great. I won't lie. There was the one lady who decided to film herself without any pants, which I thought was an interesting choice. But the vast majority of videos were really usable, good quality. There were some issues with lighting or someone leaving the TV on, but for the most part, they were great. So that's all set up. I'm going to show you some of these videos. And for this particular question, we just presented the idea of an online aggregator or retailer. We described it to folks, as a newer way of purchasing insurance. We said there are some websites like Google Compare and Overstock.com that sell insurance by collecting and presenting quotes from multiple insurance carriers. These sites do not necessarily have a direct affiliation with a specific insurance company. So that's how we presented this idea to them, and we asked, folks, what do you think about that? So this is a really broad, open-ended question. How do you feel about this as a potential way of purchasing insurance? So I'm going to show some of the videos. I'm going to hope that you're going to be able to hear them as I play them. It'll be through my computer, but I'm going to put you on speaker, so hopefully you'll be able to hear.
As far as non-insurance company websites are concerned, I would be interested, if the price is right, to go through a website for maybe auto insurance, as long as there was somebody on the other end that I could speak to directly, whether it's via Skype or an online chat. I just wouldn't want written information being sent over a non-secure email with my pricing and if it was health insurance information or vehicle insurance, home insurance. It would have to be some kind of a secure email.
I don't feel that the insurance or companies that are non-insurance companies would have enough knowledge about the products or have the person's interest in mind, or best interest in mind when they were selling them.
Insurance from non-insurance website. Again, I don't know about the quality of insurance and whether there's the expertise to sell insurance, and if I have questions, who's going to answer it for me? So I do have some reservations about that. And besides, do I trust these websites to keep my information secure?
Okay, so as you can see, there was, the first video, she definitely saw some positive aspects to this. The other two were more skeptical of the idea of using this to purchase insurance. So we took all of the responses to this question, both the video responses and the typed responses, and we just coded them into kind of positive, negative, and neutral buckets in terms of reaction to this concept. Again, this is just first reaction. You can see that folks are much more likely to be negative than positive in their initial reaction to purchasing insurance through an online aggregator. You'll see here with these open-ended questions, we did not see any difference by generation. So this was across all three groups, no significant differences, which is why they're not split out. In addition to asking them their overall reaction, though, we asked two other open-ended questions. We didn't do video for these, but we asked two other open-ended questions, asking people what they saw as the possible benefits of this as a channel and the drawbacks, the perceived drawbacks. So while the overall response was more negative than positive, respondents were very much able to cite what they saw as the perceived benefits of this as a way of purchasing insurance. So in the case of online aggregators, really being able to save money, being convenient, saving time, and being able to compare rates across carriers were cited most often as the benefits of this approach. And again, with these open ends, we didn't see significant differences by generation. When it came to drawbacks, however, again, folks, we saw this in the video. The biggest concern is security and trust using a website to do this, and then not having kind of the expertise in insurance and not being able to answer questions or offer customer support. Those are the most cited concerns when it comes, when it was kind of unaided, open-ended, top of mind. We also asked an aided list of potential benefits and drawbacks of purchasing insurance in this way. And here we did see more differences by generation. So when we presented a number of possible benefits and drawbacks and asked people how much they agreed or disagreed that these were benefits and drawbacks, you can see that boomers are much less likely to agree that these are benefits. And on the flip side, boomers are much more likely to cite some of these things as drawbacks, particularly not having an agent expertise, not trusting the site, not having a live person, and not getting the best price. So here we see, if you kind of put them out there, the millennials and the Gen Xers are more likely to kind of see the benefits, but the boomers are much more likely to see the drawbacks here. We did the same series of questions. We asked the same series of questions with retail stores. We presented the idea of an in-person retailer like a Costco, a Walmart, or a CVS, offering different types of insurance to be purchased in their stores by calling or on their websites. And we asked, again, folks, their general response to this idea, to this question. And again, this is the other question where we had video response. So I'm going to, again, play some of these videos of people reacting to the idea of a retail store as a channel for purchasing insurance.
Retailers like Walmart, CVS, Costco, companies like that are physical building in your hometown that you can go and you can actually do insurance shopping while you're doing your other shopping. And it's a very good idea.
I don't feel that a non-insurance retail store has the proper expertise to give you advice on purchasing any type of insurance. I would not trust anything that they have to say.
my opinion on whether or not I would buy something from a Walmart like insurance, yeah, I would. One, they're not specialized or have the knowledge to do that. That would be like me going in there to buy milk. You know, I'm not going to ask what someone else's opinion is unless you're a specialist. And there's no way someone at Walmart is a specialist. I don't buy my phones there. I'm certainly not going to buy insurance there.
So that was interesting. Again, you saw one person who thought it was a positive idea and then two others who felt negatively. I thought that last one's interesting because lots of people do buy their milk and their phones at Walmart, and she clearly does not believe that someone should kind of be acting outside their core expertise. So again, you know, when we bucketed those general reaction, those general responses into positive, negative, and neutral, we saw very, very similar responses we did for the online retailer. So much more negative, almost 3 times more negative than positive. But again, we asked folks, you know, top of mind what they saw as potential benefits and drawbacks of this as a channel for purchasing insurance. And again, people were able to kind of see what the possible benefits would be. So folks, you know, like the gentleman in the video, cited one-stop shopping as a big advantage, as well as being able to save money by doing it this way. And again, negatives were, you know, again, from the videos we heard, feeling like a retailer would not have the insurance expertise, and then issues with, you know, trusting that as a channel and not having an agent to answer questions or offer support are commonly cited drawbacks. And again, we did not see differences by generation on these questions. I should say, you know, we presented this notion, this channel, as the retailer offering the insurance. We did not ask about a potential partnership, you know, where you'd walk into Costco and there might be a kiosk for a carrier, an insurance carrier, or an independent agent, someone kind of in the store but still being represented by an agent. And, you know, frankly, we didn't ask about that, but if you look at some of these drawbacks, that might be something that would make people feel better about this potential channel and kind of eliminate some of those drawbacks. Again, we asked those aided benefits and drawbacks. We asked a list, very similar to what we did for online retailers. Here we saw a little bit of difference by generation, but definitely less so than on the online retail channel or the online aggregators. You definitely see there's more commonality between the generations about how they feel about this retail store channel. And again, you know, as we saw a little bit earlier, there was less difference as well in terms of familiarity. I think that we all have, again, experiences in retail stores. But millennials are more likely to think that this might get them a better price and like the sense that they could do it themselves, whereas boomers are much more likely to worry about not having the agent expertise and thinking that they might not get their best price this way. We did want to get a sense of why people are using particular channels, what's important to them when they're purchasing insurance. Now, I know there's a lot of different factors that can go into what's important to folks when they're purchasing their insurance. We forced people to look at kind of 4 factors. We wanted to see how important each of they were versus each other. So we gave people 4 factors, and we asked them to kind of attribute 100 points to these 4 factors in terms of their importance in purchasing insurance. Not surprisingly, what we found is price is the biggest factor. There were some significant difference here by generation just on working with the expert, where boomers were a little bit higher, and do-it-yourself, where millennials were a little bit higher. But price was consistent, was not different, and was always the dominating factor, and sort of the order of priority was the same for all the generations. So, you know, you look at this and you say, well, price is most important to everybody. So it doesn't matter how old you are, price is the key factor. So everyone's going to use the channel that's going to get them the best price. End of story. That's what's going to drive them, whatever channel can get them the best price. Interestingly, we asked folks what channel can give you the best price. So what channel provides the best possible price when you're purchasing insurance? And what we found was not all generations agree on that. So you can see here that boomers are most likely to think that the agent gets them the best price. And we saw that when we looked at the drawbacks of the other channels. You know, they didn't think they were going to get the best price, and that's because they think an agent is going to get them the best price. When you look at Gen Xers and Millennials, though, you see it's a much more even split. You know, they're divided on what channel is going to get them the best price. I mean, Millennials in particular, if you look at agent versus online retailer, it's almost the same in terms of which channel they feel like is going to get them the best price. I should also mention these circles don't add exactly to 100. There were other channels that were just so small, single digits, that we didn't include them. So here you see, you know, if Millennials think that an online retailer aggregator can get them a better price, and price is most important, you could see that they might be more likely to consider that channel. We wanted, though, to kind of, you know, part of this research was, what does this mean for the agent relationship? What do all these other channels mean for the agent, the future of the agent relationship? So we did explore a little bit around that agent relationship. We're actually going to do a future webinar that focuses on this part of the questionnaire in much more depth, but we did kind of include some of the pieces here at a higher level. One of our hypotheses going into this research was that Millennials want to do stuff themselves, right? That's what we always hear. Millennials don't want to deal with a person. They don't want to go to a call center. They want to do it online. They want to do it all themselves and get it done. So one thing we presented a question to respondents asking them, you know, if they had a choice. It was basically a dichotomy. It was a scale, you know, one end and the other. And one end was the ability to complete the process yourself, you know, that independence being more important when you're buying insurance. And the other end was working with a professional to help guide you through the process being more important. So we asked people to kind of, where do you sit on the scale? Which is more important to you? What we found is that we were wrong, that Millennials are twice as likely to say that working with a professional is more important to them than being able to do it themselves. So, you know, one thing we realized we maybe didn't think about was that a Millennial has a lot less experience with purchasing auto and home insurance. They have, you know, less knowledge about what coverage they need, what levels of coverage they need. So they may just, you know, kind of know what they don't know and realize that they need that expertise when they're purchasing insurance. I mean, what we did see was that this was much more dramatic for Gen Xers. You see, you know, 3 times more likely to value working with a professional. And then for boomers, I mean, it's overwhelming, right? That you know, do-it-yourself is just almost a non-issue for all but a small group. And again, these numbers won't add to 100 because there was a center point on the scale, which is not included. So there were people who were, you know, right in the middle on the scale. So, you know, one thing that's interesting here is that if it's true that Millennials, you know, want that professional help because they lack the knowledge and expertise around auto and home, you know, it does make you wonder if they get more experience as they've owned these products for a longer period of time and become more familiar with them as they get older, will they then say, okay, well, now I know about it, now I can do it myself? And will that shift happen as that generation ages? We don't know that yet, but certainly that's a valid hypothesis. So we showed you this earlier in the presentation, but these are the proportion of the different generations who have purchased auto and home through an agent. And, you know, as we discussed, boomers are much more likely to use this channel. But that said, you've got more than a third who are using, of Millennials, who are still using an agent, who still have that relationship. So it certainly hasn't gone away for that generation. It's still, you know, still a valid channel for them. So we wanted to get, oh, I should say, I'm sorry. One thing that we saw that we did not expect, we weren't looking for, we just kind of found it in the data, was that 15% of the Millennials in our survey say they worked with an agent but did not purchase through that agent, ended up purchasing through another channel. And that was smaller, it was 10% of Gen Xers and 3% of boomers. So it's an interesting idea that Millennials, you know, and others may be using an agent for their expertise and then deciding either to purchase direct or purchase through another channel. something to think about. I'm sure something that agents wouldn't be happy about. Obviously, they don't want to be doing the work and not getting the business. When we asked folks why they worked with an agent, kind of what you might expect. So that expertise and knowledge, and then that knowing my needs, knowing what I need, the coverages and the products that I need individually. Those were the most common response, right? So that individual personal attention and that expertise. Other common responses were feeling like the agent was like a friend or family member, so that strong relationship, the ability to ask questions, preferring that face-to-face, and that the agent can get me the best price. So again, we didn't see differences on this question by generation. It's a smaller sample size because we're only talking to the people who did purchase through an agent. So we didn't see significant differences by generation here. We also showed folks, this is called a blob tree, and it's a graphic, a projective technique that we typically use in qualitative research. Comes out of England, to help folks kind of project how they feel about a relationship and talk about how they feel about a particular relationship. So we asked people in this case to identify the image that best represented their relationship with their agent. What we saw is that these 4 blobs were the most likely to be selected as describing the agent relationship. And again, this is just an exercise to get them to kind of then, okay, tell us why you pick that. What we saw is that, for all 4 of these, we really saw the same themes, and very similar to what we saw in the previous slide. They described their agent relationship as helpful and supportive, as someone who's a partner or a friend or a family member, someone who's there when they need them, and just in general feeling like it's a satisfying relationship, that they're happy with the relationship. So clearly folks, value the relationship they have with an agent. But they, at least with younger folks, are much less likely to be using an agent. We wanted to talk to agents and see what they thought about this, what they thought about the changes in channel, over the last few years, and then what they perceive as potential changes in channel going forward, and wonder what they thought it meant for their business, find out what they thought it meant for their business. So again, this was just a handful of interviews, but it was very interesting that the responses were pretty universal. We heard really the exact same thing from everyone we spoke to. So on one hand, the agents recognize that channel is changing, that there are these emerging channels. They recognize folks can go online now and do it themselves. They're talking a lot about the direct channel that's become, much more popular for folks to do. They mentioned auto dealers and realtors as a sort of one-stop shop for people. And they talk about Walmart and retailers and the idea that they're already kind of expanding their business into other areas, so it makes sense that they would also be expanding into insurance. So agents aren't blind to the channel, the channels that compete with them. They recognize that they're there. But as part of our discussion, we talked about that, and then we asked them, what did it mean for them? Did they see it as a threat to their business? Did it keep them up at night? What did it mean for the future of their business? And again, every single agent and broker we spoke with said, no, I'm not worried about it. It doesn't matter, because at the end of the day, I'm building a relationship, and the relationship is what matters. So it's all about trust. It's about someone who can help you find the best coverage. Some folks don't want that technology. They want someone they trust and knows what's best for them. They want that personal relationship, someone they can talk to one-on-one. They just feel like that. And frankly, we saw why people are using an agent, and this rings true, right? This is why they are using an agent. They like the relationship. They like the expertise. They want someone who knows their needs specifically. So that rings true. But at the end of the day, every agent we spoke to said, I just don't see a long-term impact of these other channels. Even direct, which we've already seen, is kind of taking the lead in terms of the overall channel. So while agents are correct in what they see as their value to consumers. They, also if you look at the numbers, if you just look at the age groups and the number, just, take out all the emerging channels and just look at direct, you can see millennials are much more likely to use a direct channel. And, there isn't really a good reason to believe that as they get older, they're going to switch to an agent channel. I mean, I suppose it's possible, but agents don't really see that. They don't see kind of the idea that as the population ages, that they might lose more business. And one thing they don't talk about in terms of their value, but something that is mentioned, especially by boomers, is that they might be able to get consumers the best price. It's not something they talk about, but it's certainly something consumers value. So if they could make that argument, that might increase their value to consumers across age groups. So, just to kind of summarize the key points that I went through, obviously right now direct and agent channels are, dominate the market, 90%, but there is awareness, and especially among younger people, there's consideration of some of those emerging channels. In particular, realtors, auto dealers and realtors are the most likely to be considered, followed by online aggregators or retailers and retail stores. Again, I mentioned this earlier, retail stores, we didn't ask, if there was sort of a partnership between a carrier or an agent and a retail store, but that could increase consideration because it would overcome some of those drawbacks that consumers cite for a retail store channel. Price is the primary driver of purchase for everyone across generation, and it's seen as one of the potential benefits of emerging channels, especially for younger consumers. So, everybody's driven by price, but especially millennials are more likely to see, an online aggregator and even, retail stores having the benefit of being able to save them money. Agents are definitely, there's definitely still value there in terms of that relationship, the expertise and the service, but, potentially differentiating by demonstrating their ability to get people the best price might help maintain the consideration of the agent channel over time. If even millennials would believe that an agent can get them the best price for their insurance, they would be more likely to consider that as a channel. So that is the presentation that we the cut of the data that we looked at here. As I mentioned, there was a lot more in the questionnaire. There's a lot more data, but we were pretty focused on generation and on the P&C piece here. I did get some questions over the course of the discussion, so let me kind of go back to that. Someone asked Rich about the homeowners piece, if that included renter's insurance, and if so, what % of homeowners was renters. I will say we lumped them together, so we called it homeowners and renters, and we did ask people if they rent or own their home, so absolutely we could cut the data, cut that data by homeowners versus renters, but I do not have that number now. Be happy, Rich, if you want to follow up with me to look at that in more detail and get you those numbers. They also asked, of the renter's insurance, what % is direct versus agent. So again, I could follow up and run that cut of the data and be able to give those numbers. I don't have that right now. And then I had a question about the generational breakout of the people who chose to view the video. We did have more millennials do the video. So we had, I think it was about 60% millennial. But we also had, I think it was almost 20% baby boomers who decided to do the video. So certainly more millennials did the video than the younger generations. But it was, again, it was surprising to me that, so many baby boomers did submit a video. And I think the Gen Xers were somewhere in between, a little over 20%. Any other questions, please feel free to put them in the chat. or follow up with me individually. You know, like I said, we have a lot of different cuts in the data, a lot of different demographics that we can look at. And we will be following up this webinar with ones around specifically on the agent relationship, as well as for other products for those of you at companies that offer different product lines. We also will have be looking at the life insurance data as well as the health insurance data.